360 Mortgage Solutions. So I just shared a story this morning on a private Facebook group I have, which is the 5-day budgeting challenge. And it really resonated, so I thought maybe I would make a blog and a video about it this week so I can share it with more people. So today I wanted to talk about credit cards. More specifically, I wanted to start with a bit of a story. So back when I first started working for one of the major banks, and before you ask which bank, it was that one, I was working as a part-time teller and I had applied for a credit card. And when the credit card approval came through, it had a limit of $10,000. At the time, I was stoked because not only had I been approved for a credit card, but the bank had decided that I could afford $10,000. So having just started working in the finance industry and knowing absolutely nothing about how money works or how credit cards work, I was pretty chuffed. Until my branch manager at the time, Leanne, dragged me into her office, sat me down and lowered the limit to $2,000. At the time, I thought she might have been overreacting just a little bit, until not long after the credit card was maxed out. So because it was reached its absolute limit of $2,000, I couldn't use it unless I paid chunks off. And what I found was I would pay a large chunk of money off the credit card, and then I would see that money sitting there in the available balance, thinking I still had that much money I could spend, and I would need to use that money again. So I got caught in a bit of a credit card cycle where I was forever paying large chunks off the credit card balance and then using that balance again to max it out. So really I had an extra maybe $500 at most, but I really couldn't get that credit card limit, couldn't get on top of that credit card limit. And I was ending up paying a whole lot of extra money in interest that at the time I had no idea and wasn't really aware of it. So fast forward to a couple of years later, when I learned how the up to 55 days interest-free period works, and I learned how much interest I was actually paying, and probably the biggest eye-opener for me was when I learned my minimum repayments I was making on my credit card meant that the credit card would be repaid in 30 or 40 years. And that's assuming I didn't keep using it. I had the mentality that the credit card was my money, and I'd forgotten to remind myself that the credit card was actually the bank's money, and for me to use it, it came at a cost. So fast forward to today, and I now use the credit card with its up to 55 days interest free so that I can take advantage of the bank's money and I'm not paying interest on it. But what I wanted to jump on and share with you is a lot of people might not know that, and a lot of people might still have the mentality of it's my money, I can access it, or they might just not even realize they're caught in that credit card cycle of paying it down, using it, paying it down, using it, and never actually getting on top of the balance. So I've got a couple of key takeaways for you. And the first and foremost is if you don't have a credit card, don't get one. You don't miss what you don't have. If you feel like you absolutely need to have a credit card, or you have someone telling you you really should have some backup plan, then by all means get a credit card, but get it set at a limit that you can afford to repay in no more than 2 or 3 pay cycles. And the reason I say that is so that if it does get out of hand and you do need to use the credit card, you can get it paid down nice and quickly, and it's not going to cause too much stress for you. And finally, if you're already stuck in that credit card cycle, there are 2 options for you to consider to help smash out that credit card debt. So the first one, and probably the best one, is if you set up a savings plan to start saving as much cash as you can and use that cash to pay down the loan. Now, each time you make a large chunk repaid back against the credit card, you then go into the bank and lower the limit. So let's say your limit is $2,000, you've just paid $500 off, you go into the bank and lower it to $1,500 limit. Eventually, as you keep doing this, the limit will come down and down to either a limit that you can afford to repay in 2 to 3 weeks, 2 to 3 pays, or you can close it all together and then start using your savings instead of the bank's money. The final option that you can consider is to consolidate your debts. Now, this is definitely a case-by-case basis, and you need to do the math to make sure that it is going to save you money, and if so, how much, and what other things do you need to be aware of. But basically what I mean is if you took out if you took out a personal loan to pay out your credit card and close it off for good, you now no longer have a credit card and you've got a personal loan with a debt that will be repaid within 5 to 7 years, depending on how long a term you take. This means that there is light at the end of the tunnel. You are forced to pay back that personal loan. It will eventually close and go, and you will no longer have a credit card debt. So if you want to know more information about how the up to 55 days interest-free period works, how to take advantage of the up to 55 days free so that you can use the bank's money at no cost, or you want to know an example of how to consolidate your debts or how to work out if consolidating your debts is going to be the best option for you, just pop a comment in below, and I'll certainly get onto that in the next blog or the next video if that's what you're interested in. Otherwise, guys, I hope you're having a great day, and I'll catch you in the next